Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar here. Steve Miley on the call for trade day on today, Tuesday, the 18th of April, 2023. Welcome, everyone. Right, let's go through our usual regular run through in here today. What we've had, what we've got coming up, macro data, micro data, earnings data, some articles from the major news wires, macroeconomic fundamental events, what's impacting markets right here, right now, and a quick look at the charts. First of all, let's look back. Wall Street ends higher. Investors await earnings. Fed cues. So, we had a fairly quiet start to the week, given that we've got a lot of bigger earnings reports coming up a little bit later in the week. Given that the majority is the big data, we didn't really have any data from either Europe or the US of significance. So, fairly quiet start to the week, up about 0.3 across the board on the major US equity indices in here. Focus really is going on to those earnings. As we go into this week, and also on any kind of Fed speakers. I'm trying to still gauge where the Fed are at. So positive start to the week. Looking into what we've had in here as well overnight. This has been there were so many headlines this morning when I got up from Europe, from Asia, regarding the Chinese data. You can see a sea of green in here. The GDP numbers, industrial production numbers, and retail sales numbers in here, generally all beating expectations. Only a little blip in here, only just lower on the industrial production data, but the big leap in the GDP in here, the quarter-on-quarter data was in line, but the year-on-year was expected at 4%, came in at 4.5%. Chinese stocks actually rallied and then sold off. So actually a kind of a negative reaction. But generally the market has taken this. Other markets, Europe and the US seems to have got pushed forward on that. So I think, global economy looking good, even though the Chinese stocks didn't do so well. We did see, I think, a positive reaction out of European and US equity futures overnight, and they've held on to those gains. Looking at some other headline data in here we've had from the UK and from Germany this morning. UK data in here for the employment report, probably worse than expected, if anything. We did see a slowing in the economy, a higher unemployment rate than expected, which is actually a positive if you think about it, because they are trying to slow the economy down. However, the bits they're trying to slow down is the inflation and the average earnings data in here higher than expected. So not the best in here. And we've actually seen the pound go higher today. Why has the pound gone higher? The pound's gone higher because of an expectation of maybe a more hawkish Bank of England. So the pound is up on the back of that actually more negative data in that it was more inflationary. So we've had that. We also had German ZEW data in here, worse than expected in here, but nevertheless none of this has sapped the markets in here, and markets are actually performing fairly well, the equity markets, as we go into the start of the US day. What do we have today? US side is fairly light still in here. Housing starts, boring, in about 1 hour's time. It's CPI from the Canada, more interesting. So probably keeping an eye on this. It could have a little knock-on effect into US indices, depending on how far away. CPI is obviously very much the focus for the global economy, the inflation data. So maybe keeping a slight eye on the Canadian CPI data today. Later on today, we do have Bank of Canada speakers, but I think more importantly, FOMC at 1 o'clock. Bowman is speaking from the FOMC. So check out Bowman later today. Earnings, probably more important in here. We've already had Johnson & Johnson and Bank of America, green on EPS and revenue in here. Also Lockheed Martin, green. Goldman Sachs, slight miss on their revenue, but beating on the EPS, earnings per share. The big one now to watch. So this is all positive. That's helping us grind higher in here. Positive macro data out of China. Some slightly negative out of UK and Germany this morning. Positive earnings data out of the US, pointing us higher. The big one this evening, Netflix. After the bell. So watching out for that. Post bell, Netflix, for maybe some after hours trading for you guys. Remember, not Netflix is important in its own right. $148 billion company. However, it is a barometer, a bellwether, a reflection, an echo of not just the US consumer, but the global consumer. So watching out for Netflix tonight, see how the global consumer is faring up, given that we've had all these interest rate hikes over the last year across the globe. So we'll certainly be watching for that. That's really the highlighted data as we go forward for the rest of the day, along with Bowman speaking, as I said, later today at 1 o'clock. What else we have? So Wall Street week ahead. This is a little bit of a bigger look ahead, but talking about we're shifting away from the financials now. We've obviously had a couple more financials today, but looking at the consumer discretionary. What are we really watching in here? Consumer discretionary, Tesla and Netflix this week. Okay, we're going to be certainly watching them. They've also highlighted AutoNation as well. But Netflix and Tesla, I think tomorrow or Thursday. Which day is it? Tesla tomorrow. So Tesla tomorrow. Okay, so certainly we're going to be watching out for that. What's 5 things got? Well, they're talking about this climbing a wall of worry. That's a phrase from the markets. The markets continue to push higher, up again slightly yesterday, had a strong rebound last week, post the CPI and post the Fed. The S&P up 6%, I believe, on the month so far. Yeah, we've got it there. It is 6% in a month, not on the month, over the last month. And there's against all these headwinds, against the headwinds of a still relatively hawkish Fed, against the headwinds of a mini banking crisis that we saw in March, against the headwinds of the Fed telling us they're now expecting recession. All of this, despite all of this, stocks keep going higher in here. Hedge funds are short, according to the futures markets. Okay, a model kept by Goldman Sachs shows mutual fund and futures market outflow suggests that rather than rise, the index should have been 3% down over the past 3 months. Okay, so and this quote here: "Being bullish today is a very lonely proposition." Okay, that tells me you want to be long. This is bigger picture, right? I'm not talking about day trading. This tells me that the risk is still to the upside. The market is still playing this from the short side. This is in here, nothing particularly interesting in here. Office woes. China's economy, we've already spoken about the positive data we've seen out of China today, and European stocks edging higher on the back of that, despite the more negative UK and German data. And then this is, I just wanted to, so that's basically the US 5 things to start your day. I had this one from Europe. The reason I wanted to point to this is in here, a couple of things, Europe and in Asia. So Emmanuel Macron, the French president, is up against the wall in here, really struggling. Lots of protests going on in currently in France because of pension reforms he's putting through, but he's trying to actually have talks with the unions to push past that. And the other thing to note, and I don't think real big picture, big picture is important. Short term, it hasn't really had any impact. But Taiwan buying for a land-launched Harpoon missiles, and I've obviously seen the various shenanigans with China over the last year, and particularly over the last month. So stocks rise as China growth tempers earnings worries. So Chinese GDP data helping us higher this morning. China's economy gathers speed. Global risk raise challenge to outlook. UK pay growth sends sterling higher. We've already mentioned this. So earnings data higher than expected means a potentially more hawkish central bank, the Bank of England, which then has pushed the pound higher with a potential, and then that German investor survey. So the ZEW survey is an investor survey. Big drop in that. So certainly negative from that, but hasn't really impacted because European stocks rising, traders' way earning growth outlook. And if we look this morning, we're up anywhere between 0.25% and 0.5% in here between the UK index, the FTSE, the DAX, the German index, and the CAC, the French index, all doing well this morning. And that means that the US stock futures are also pointing higher, between 0.25% and 0.33% up, having added about 0.33% yesterday. So all looking good, fine, and rosy at the moment, pointing higher. Fed tool, not much to add. This keeps creeping up. Okay, so we were 60, 65 last week, 85 yesterday, actually 85 this morning when I looked at this, nearly 89% in here, basically nailing on a rate hike and then on hold, the next meeting, that's May, on hold through the summer, June, July, and then looking for maybe cut by September, certainly a cut by November, and then another cut by December. So the market looking 25 up, 225s down in here. I think we're going to meet somewhere in the middle between the Fed saying basically up one more and then on hold. Okay, so my view is we'll probably be up one more, And then I think we will be down one more by the end of the year, back to where we are now, potentially one more lower. But I think, the market is probably too dovish and the Fed is sitting still too hawkish. They're probably going to be pushed to cutting rates, given that we might be edging towards recession in the second half of this year. And I just wanted to highlight this as well. It's not on the right chart. Let's make it interactive chart. But despite, I think I spoke about yesterday, but despite yields pushed higher again in here yesterday, getting very close to their highest level in here since the end of March. Okay, so yields went higher again yesterday. Yes, we've had a dip in yields this morning, but despite yields going higher, stocks are still pushing higher. Particularly the Nasdaq is holding in there and doing well. It's still slightly underperforming, you would argue, the S&P, but nevertheless, given where yields are going, given that remember, the Nasdaq is more sensitive to higher yields, okay, because it's growth stocks. Growth stocks, because of discounted cash flow, are more sensitive to higher yield activity. So higher interest rates, higher yields, more negative for growth stocks, but the Nasdaq is still doing pretty well in here considering. Let's take a look at the S&P and Nasdaq quickly. So a dip and a rebound in here. So Thursday higher, dip and a rebound Friday, dip and a rebound yesterday, boom, making new highs in here already this morning. And look, we're pushing right up into these highs in here that we saw from earlier this year. Potentially today, we're going to be getting close to, or this week certainly, getting close to the highs of the year. We're starting to dismantle this in here. If you zoom in on this, and we can zoom in on it in a minute, but if we zoom in on this, this is like a multi-point top. I think it's a 5-point topping pattern in here. And now we're pushing into various resistances. The first one being there at 42.05.5. I think sees that as an easy target. Somewhere between there and then this peak up here at 42.23. I think that's an easy target for today, somewhere in between that zone. And if I just zoom in a little bit, you can see pushing higher again this morning, dismantling this potential negative consolidation we've seen since the end of last week. And if I zoom out a little bit, I'm on 15-minute here. If I go to like maybe the 1 hour, I can see what happened. See the data in here. So you see this 5-point top, 1, 2, 3, 4, 5-point top. Okay, I think the lower part of that top, we're already edging towards that. That's the levels I've just given you. But we can start to dismantle this top in here. Okay, we're already partly dismantled it by pushing up into it last week when we got up into here last week, right? And started to dismantle this top. I think we can fully dismantle this top, and then if it takes out these highs, then we could be significantly higher. Nasdaq not looking quite so good in here over the past 2 weeks. Very much sideways as the S&P has made new highs. But again, dip and a rebound Friday, dip and a rebound yesterday, and look, pretty strong in here this morning, aiming at the more recent high, easily up to and through their possibility today, 13,348.75, minimal target there. And then above there, we've got nothing until then we're looking, because we're already, remember with the Nasdaq above these, where that topping pattern is from the S&P, we were already way above that. So despite the underperformance more recent, we've outperformed since March, okay? Outperformed the S&P in March. And so this is, this could, you take out the high there, we could get some false buying coming in from some of the bigger players in here. So watching out, that's going to be the big trigger point, the peak in there. Quick nod to oil and gold in here, and then I'll wrap us up. Gold in here. Look on the daily chart. I stayed bullish in here. We did go lower yesterday. We actually undercut last week's low yesterday, but then a strong rebound for a doji pattern. Okay, this kind of doji pattern yesterday, like a long-legged doji. So that's often a turning point, and you can see down, long-legged doji, potentially up today, and we're already pushing higher. For me, this is bullish. I think all eyes on that trend line in here. And that trend line's coming around 2023, 2024. All eyes on that trend line, and above there, you got the little impulse point. Impulse point is at 2023.9, so right in there with the trend line, and then the actual swing high there, 2028. So but up through 2023, 24 certainly looks more bullish in here for gold, and I'm staying with a bullish view there. Let's take a look at oil. Oil, significant drop yesterday, having been inside pattern in here after the breakout. Looks like it's vulnerable to going into this thing, at least a 13-period exponential moving average, which comes in just below 80 and maybe to the bottom of from where we got the impulse. So it's almost like a fake breakout. So oil looking vulnerable, maybe back down to 79.37, even as low as the gap in here at 79.00. So that kind of zone there is a potential target for oil. If we zoom in on the 30, we are getting a slight rebound, but it looks like we've still got lower lows and lower highs, made a new lower low and really think the risk is that this fades lower going into today. All right, guys, that's all I've got for you. Any questions? Any questions? Any questions? It's all quiet on the Western Front. No questions? All right, guys, I'm going to wrap it up there. I'm going to wish you all, as ever, a great trading day. Take care. Stay safe. See you tomorrow.